Yesterday, Jeff, you wrote this article titled Tariffs, Triffin, and Trump, How the Endgame Sends Bitcoin Vertical. Jeff, really high level, how do and what do the Trump tariffs have to do with Bitcoin? How are these two ideas connected?
Absolutely. They're connected at a very intuitive sense. The first is tariffs create chaos, and chaos is not loved by markets. And so while we think that for the short-term sentiment, risk could feel off, the reality is Bitcoin thrives in chaos, because chaos is actually the moment for which Bitcoin shines in the certainty that we know for the role that it can serve as a place of stability. And so that's one. The other thing is, ultimately, tariffs, no matter how you think what the end game may be, whether it's actually temporary or whether it's permanent, the reality is it will create further fiscal deficits, both on the imposing and the imposed. And when you connect the dots there, we know Bitcoin is the ultimate trade to hedge for future debasement, and tariffs are going to accelerate it. And so both of these arrows ultimately point to Bitcoin at the center, for which the upward trend is higher.
In this insightful interview, Jeff Park breaks down the powerful connection between geopolitics, economic policy, and Bitcoin's explosive rise. He explains why tariffs create chaos, why Bitcoin thrives in uncertain times, and how the global financial system is being pushed toward inevitable currency debasement. Jeff also explores how political and economic decisions, especially in the US, are accelerating Bitcoin adoption on both a speculative and defensive level. Stick around until the end to hear why governments, institutions, and individuals are all being driven toward Bitcoin, and why understanding this shift now could be the key to financial freedom in the years ahead. Also, guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, over to Jeff.
One of the last lines in your bit, we've talked about this briefly. Never doubt the uncomplicated incentives of the transparently motivated and align yourself next to him. You're talking about Trump, of course. We talked about this. But the punchline you're really getting to is how Bitcoin is a vehicle to align yourself with the incentives of Trump. Maybe you can connect those two bits. Out of all of this, everything we've been talking about so far, how does this impact Bitcoin?
Yeah, so many people today are concerned about the path dependencies and the second and third order effects of what these tariffs are going to do and how China is going to respond and yada, yada, yada. We don't know. None of us can know. But actually, what's really easy is solving it backwards by knowing what the end game is. And the end game, as I've described and as you've outlined here, is that Trump wants one thing to protect his own bags, which is lower 10-year rates. And that is nakedly obvious in front of anyone who can understand what he's doing. And so actually, if you know that's the end game, it's a little bit easier to solve backwards as to kind of putting things in motion to get to that end conclusion. So if you take for granted that then the 10-year is going to compress, two things are going to happen. One, risk capital in the US will be on fire again, because there's now a wall of cash coming back into the market with yield lower that's going to be chasing risk. It's going to be great for the stock market. It's going to be great for Bitcoin. And if you actually thought tariffs were permanent, you will know there's going to be a large income tax cut associated with that. Unfortunately, income tax as a tool is regressive in nature, right? Where the removal of it actually then creates more abundance of wealth at the top, which is more capital then that is going to seek risk. So there's actually a profound effect on risk capital if you thought an income tax would be repealed. So that is incredibly good for Bitcoin. But the other side of it is, if you're not an American and you're on the other side of that equation where you are suffering on the back of these tariffs, you're basically sitting at home looking at TV and realizing your elected leaders completely failed you. And now they're basically on a race to the bottom to debase their own currency against a weakening dollar to basically try to sustain their export economy. So they're going to print like as if there's no end. And what you're going to witness is an acceleration of that depreciation of your non-dollar asset that you as a foreigner are denominated by. If you're that person, ask yourself, what am I going to purchase to protect my wealth in a way that I seem to have no option as a citizen of any of these countries? The beautiful thing about Bitcoin, and this is the ultimate ethos of what it represents, is that it can be bought anywhere, anytime, without any friction, in the ways that it gives the sovereignty back to the person, the individual. And so they're going to buy Bitcoin too. So you got this incredible demand where both sides of the market, for a very different reason, one's for speculation, one's for insurance, but they all come to the same conclusion. You have to buy Bitcoin. And that's why I think this is as easy and clear as it can be for why it's so optimistic.
Do you think that this is why Bitcoin has become just like living in Donald Trump's brain? He's the Bitcoin president. He loves the Bitcoin industry, the crypto industry. Granted, we paid him a lot of money to help elect him. So that makes sense. But also, he's like truly leaning into crypto. He launched a meme coin. He's launched NFTs. He has a DeFi app. He's called himself the Bitcoin president. Do you think that this is a coincidence, or do you think this is a part of Donald Trump's transparency? He also understands that the effects that he wants to have as president is going to be very good for the value, the price of a Bitcoin. And so therefore he has aligned himself with Bitcoin. Do you think that's a coincidence, or do you think he's also, in addition to bullish real estate, he's for the same reason bullish Bitcoin?
Yeah, this is a fascinating question, and one when Trump was first originally against Bitcoin, it kind of blew my mind, because everything about Bitcoin to me represented alignment with his own general belief, which is like a distrust of the state, the intermediation, and actually wanting an asset that could be a little bit removed from what he would call as institutional bias, as a personality, right? But then you have to remember, actually, the most protected asset class in this country, in America, is real estate. It's actually, I would call, the polar opposite of Bitcoin in some sense, because it's the most regulated, it's the most compliance-centric asset, and it's a protected asset class in some sense. And he actually does have a bag in that. And so his calculus could have been a little different, which is a tail risk associated with Bitcoin that could then have impact upon him affecting those compliance assets. Once upon a time may have been a risk too great. But I think now what you're realizing is that he's barbelling the strategy. You can own a bunch of really nice compliance asset that benefits when 10-year rates go low. And you can also own a bunch of resistance assets that also go up when 10 years go lower. And the thing is, in my Bitwise journey of talking to investors, the largest group of people that I found who intuitively understand the usefulness of Bitcoin have always been real estate investors, hands down, because they know the importance of property, collateral, and the way that it actually stores value. And the things that is most discomforting to someone like Trump is that it kind of operates in a gray regulatory area where real estate is actually operated with 100% certainty of the regulatory arena. So I think over time, though, he's come to this view that he's barbelling his portfolio. I think it's actually super smart, and he's preparing himself, I think, to continue to win the mind share of that resistance movement alongside his greatest bags of compliance assets.
That crypto real estate barbell is something that I've noticed in my crypto journey inside, like citizens inside of the Bankless Discord, and even my crypto friends. There's just this general attitude that the only thing that's truly real in this world is crypto assets and real estate. And it's if a crypto person sells their crypto, which they very rarely do, most of the time it's because they want to buy a house or invest in real estate. And
Totally.
so there's this natural equilibrium, this natural like gravitational pull for the crypto investor to also become a real estate investor. And I think maybe what you're saying with Donald Trump is that we're actually just watching it happen in the other direction. We're watching a real estate investor naturally discover the value in the properties of digital bearer asset, non-sovereign store of value.
Yeah. And I think it actually kind of helps that we're seeing more financialization in Bitcoin too, in the ways that the ETFs have come forth, and MicroStrategy has come out to financialize different risk segmentation for the capital structure that can provide investor risk preferences. Because real estate too is ultimately a privileged asset class because of that very nature of it, right? Like it is actually the hard collateral that then has like a multiplier effect on the securitization market that brings the arbitrage opportunities. So real estate investors are not always like directional. They're actually investing on like the regulatory arbitrage and what is permitted with that asset. And I think Bitcoin entering the mainstream arena with like SAB 121 getting repealed, like improves the convergence of those worldviews, which is Bitcoin directionally is also useful, but there's going to be so much opportunity in financializing that too, that somebody like Trump, I think, could also intuit. And hey, maybe Eric does too now, that he's also in support of supporting ETH.
Jeff Park explains the complex relationship between Bitcoin and risk assets, challenging the assumption that Bitcoin always follows traditional markets. While short-term volatility may cause Bitcoin to move in sync with stocks, he argues that over the long term, Bitcoin becomes uncorrelated due to its unique nature as a flow asset rather than a state asset. Unlike traditional investments, Bitcoin isn't perceived as cheap or expensive. It simply exists at the price people are willing to transact. He also explores how the current crypto cycle may look different from previous ones. With the introduction of Bitcoin ETFs and leveraged Bitcoin instruments, investors now have new ways to take high-risk, high-reward bets without relying on altcoins. As a result, capital that previously flowed into speculative crypto assets may now be directed toward Bitcoin-related financial products instead. Despite these changes, Jeff believes certain altcoins, like Dogecoin, will continue to thrive due to their unique cultural and market fit, but the way capital moves within the crypto ecosystem is evolving.
We've talked a lot about Bitcoin in this episode, talking about the impacts of Donald Trump's choices as it relates to the Bitcoin price, but let's talk about, and really just precisely talk about, risk assets generally. Is Bitcoin and risk assets the same conversation? If Bitcoin goes up, risk assets go up, or is there a difference, a nuance here that we should parse apart?
Yeah, I think everyone has imagined one day that Bitcoin would be untethered from correlation to our risk assets as we know it. And there's actually a lot of ways to imagine that it already has. And the way you kind of imagine how it has is you have to zoom out. Day to day, when risk assets sell off very, very violently, Bitcoin will sell off very, very violently. And I think there's actually a reason for it. The reason is Bitcoin's number one value proposition is its volatility, right? And so if you see incredible sell-offs in traditional markets where your perception of that value gap is wider, then you have to imagine the cost of capital to hold Bitcoin just went up relatively, right? So like, let's say I'm an institutional investor that loves certain stocks and the stocks I love gap down 30%. The cost of capital to hold Bitcoin, unfortunately, just went up because I would rather own those stocks that are down 30% with more certainty. So you have to sell Bitcoin. So there's always going to be that cost of capital question without Bitcoin having volatility, which is why I always show Bitcoin's volatility is the feature that people demand and will continue to demand. And in the long run, however, the chart is that Bitcoin is actually representing a moment in time for the price in which people transact. In that sense, there's no cheapness to Bitcoin, right? It's not like when Bitcoin goes down 30%, people think it's cheap because the relative benchmark to value is not based on any value mechanism. It's actually a flow asset instead of a state asset. And that's actually how commodities are generally valued. And so the thing that's nice about Bitcoin is you'll see the correlation when there's extreme movements, but it's only really those extreme movements and not the down 1%, down 50 bips types of market. There, Bitcoin's actually unrelated. And over a long period of time, what you see is that there is a persistent bid for Bitcoin at a price, which eventually, when you normalize it to any correlation, is actually uncorrelated over a long period of time to these risk assets. And that's the beautiful thing. Bitcoin doesn't have a value model that perceives cheapness or richness. It just is what it is at the price that people choose to transact and own an asset at a particular moment in time.
It seems so simple. I like the mental model of short-term correlation, long-term uncorrelation, decorrelation. I think that makes a lot of sense. So the first question was about risk assets. But what about specifically longer tail crypto assets? So ETH, Solana, Fartcoin, $20 million market cap coins. What do you think is the kind of the roadmap? If we follow the roadmap that we've discussed for Bitcoin, what do you think is the roadmap for just the long tail of crypto assets?
Sure. I love my altcoin bags as much as the crypto bro next door. The reality, though, is I have a feeling that this cycle might look a little different than the last cycle.
Interesting.
And the reason I say this is because historically, people looked at altcoins as a way to play some levered beta or levered volatility to Bitcoin for those who are truly seeking a high level of risk. But with the introduction of Bitcoin ETFs And actually, as of December, the introduction of Bitcoin ETF options, you now have the chance to create those extremely levered bets using Bitcoin instruments.
Using actual leverage, right? Okay.
Yes, which you did not have in the prior cycles, right? You had Deribit, of course, but no one's really trading there at the retail level. But what you've seen that is MicroStrategy has capitalized on the same thing. That's why there's a 2x levered MicroStrategy ETFs now. That is an all-time favorite. The NVIDIA 2x levered ETF was actually the best performing ETF last year, believe it or not. It actually out-inched Bitcoin by like 2%, which is funny to see. But it shows you that there's different ways to take those kinds of levered risk-on bets with now Bitcoin that didn't exist before. And so the one counter argument I have is actually the capital that once upon a time would have gone to those altcoins are actually now going to these Palantir 2x ETFs. They're going to the MicroStrategy options and leaps and Bitcoin ETF options, etc. That being said, I think there will always be interest in certain altcoins. I personally think that Dogecoin is here to stay, and it's going to have a profound market fit for the future in the ways that it's still the best vehicle to trade cultural capital, in my opinion. And you'll see those types of things continue to nonetheless exist, but it will look a little bit more different in the dispersion of outcomes that it carries.
Jeff Park lays out a compelling case for why Bitcoin is at the center of global financial shifts. He explains how tariffs, inflation, and fiscal deficits are accelerating demand for Bitcoin, making it not just a speculative asset, but a necessity for individuals and institutions alike. As governments struggle to manage monetary policy and geopolitical tensions continue to rise, Bitcoin remains the only asset that operates outside of traditional financial constraints. Whether as a hedge against economic uncertainty or a vehicle for long-term wealth preservation, Bitcoin's role in the world economy is becoming clearer by the day. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.